Peter, CEO of Wish. How did I do on that?
1, 2, 3. I don't know if this works.
Are you? Please. Is that mic working?
I don't know. It doesn't seem like it. Or
Do you want to?
oh, we can share.
Okay.
Oh, wait. Now it's on?
We are
You guys hear
good.
me? We're
Okay.
good?
Okay.
Okay, great.
So I met Peter for the first time yesterday. We've talked before a couple of times,
Usually via text message.
usually via text message.
3 a.m. Trump style.
3 a.m. Trump style. So that's actually a good place to start. Well, first of all, so did you hear me asking the room about who shops at Wish?
I heard nothing.
Okay, so we had about 20% penetration, but about 8% of that, about half of that was Wish over here. So that actually is a great segue into a post you wrote a couple of days ago, which I wanted to bring up, which was, it was on your private Facebook, but then you posted it on Medium. And the general idea was Silicon Valley is still stunned by the election of Donald Trump.
Can't say it? Are you still triggered?
I could say it.
Okay.
Donald Trump is the president-elect, and you said that this is on the coast. We live in this different world from the rest of the country, and that sort of blindness was part of the reason that at its start people didn't understand Wish, investors didn't understand Wish, and maybe still today. I know from reporting-wise, it's still one of the most polarizing companies I cover in terms of whether the growth is real, who are these customers. So did I get that
Yeah.
summary right?
The gist of it.
Why don't you explain what you were trying to get at?
Yeah, if my mic goes out, let me know. I'll borrow your mic. So I think there's 4 criticisms of Wish, 4 most common criticisms of Wish. I think 2 are common misconceptions. The one that you mentioned is probably the first one. And 2 are probably valid criticisms.
The first one being who buys this stuff?
Is sort of this common dialogue that we had in 2013, 2014, 2012, which is, okay, your metrics look great, they're headed in the right direction, but I wouldn't shop on Wish. I don't know anyone that shops on Wish. I can't believe that there are people that would shop on Wish. And
because the items are super cheap and not
they're
branded?
super cheap. Well, because if you really think about people in Silicon Valley and probably in this room and maybe New York, LA, well, people that are doing well. People that are doing well, which is probably people that didn't want change, people that probably didn't vote for Trump, for instance. Their priorities in terms of e-commerce are the following. And you can disagree or agree with me, but I think it's purchase experience. Meaning that the most important thing for me is I wanted to get it fast, I wanted to get it reliably, I wanted to get it in a pretty package. Then I want really good product quality. That's probably my second priority. And then price is, I don't want to get ripped off, but I'm not really looking for the best price. And if you really look at the statistics around Amazon.com, they're often within 5 to 10% of the best price, but they're not often the best price. And if you look at our consumers, that equation is basically flipped around. And it's price is the most important, because if I can't afford it, I can't have it. Second is the product quality. Like, it has to work. It has to fulfill its utility needs. And then lastly, it's the purchase experience. So our consumers are much more willing to wait 2 or 3 weeks, as horrendous as that sounds in this room, in order to save $3, €2, or whatever it is. And that was sort of the most common misconception of Wish. It's typically the investor class in Silicon Valley said, I don't use it. I don't know anyone who would shop on Wish. I don't think anyone would shop on Wish. I think this is as far as you guys go. And during the election this year, we basically heard the same thing. And I fall into this category as well. I don't support Trump. I don't know anyone that would support Trump. Therefore, no one supports Trump.
Founders Fund is an investor, right?
Right. So Founders Fund is an investor, and Peter Thiel, great foresight there. So hopefully, he has the ear of the president-elect. So we'll see how that turns out. But my point is
that a joke? Is that a joke?
No, we'll see, right? My point is, like, this is a sloppy conjecture. Like, there are over 62 million Americans that voted for this guy. Right? They exist, and we didn't see that at all. We overlooked it. And in the same way, investors, I think, kept on overlooking Wish in 2012, in 2013, in 2014. And some of you probably still overlook it now. but it exists. So in terms of hard facts, look, the median annual household income in this country is about $50,000, meaning 50% of households earn less than $50,000 a year. Like, these households exist. 80% of households in the United States earn less than $100,000 a year. Right? This exists. In Europe, the annual household incomes are actually much lower.
And so these are customers that would typically, before Wish, do a lot of their shopping where?
Walmart, local shopping malls, et cetera, right? So there's the analogy of why we missed it, how we missed it, and this is what I call the invisible half. There's basically 50% or so of Americans, you can argue about the popular vote, let's call it 47%, that we basically ignore, but they do exist. When we launched Wish, we didn't think that we were going to go after value-conscious consumers and target them with unbranded goods, but the data was indisputable.
So you started with some brand. Did you start with branded, or what was the initial idea?
The initial idea is
ad targeting, really back in the day?
That's really, really back in the day, but it's really hard to scale a really large business there because we don't own the advertiser and we don't own the publisher side. So that we knew we weren't going to create a big business. What we knew was internet traffic, this was 2011, 2012, was quickly moving to smartphones, and e-commerce was not yet. And it would look a lot different. Shopping on smartphones would look different than it did on desktops. It would be less search-oriented. It would be much more entertainment-driven, consumers deriving some kind of entertainment value from it. Shorter sessions, smaller screens, much more visual. And there, we largely got it right. So focusing on personalization, taking the Google methodology of getting more and more data and then developing algorithms and intuition around those algorithms to continue driving up the conversion rate. And we basically, for the first 3 years, we've doubled conversion rate. And like this year, it's up like 65% or so year over year. Right? So it's a function of better algorithms.
So that's the percentage of people who open the app and go on to buy something?
Exactly. So there, I think, on smartphones, we're competitive or maybe even beating companies like Amazon and Taobao.
So let's step back to a second for the.
Sure.
Seems like you have quite 3 years in, still a chip on your shoulder about people not believing.
No. So there's pros and cons about this, right? So it was really difficult to raise funding. Luckily, with our model, we don't take any inventory, so we don't necessarily need to take that much funding. At the same time, there's basically still, I think, no competition in the United States and Europe, which are our biggest markets for Wish, right? Like, I don't see any other startups at scale competing against us.
Keyword there, startup. So a lot of the items you can find on Wish, if you dig deep enough into eBay's marketplace, Amazon's marketplace, if you're AliExpress, which is Alibaba's app for consumers outside of China, you can see a lot of the same product, right?
You might be able to surface those up. I'd say because it's not a priority, they are often more challenging to find. I'd say that AliExpress, the vast majority of their sales and consumers come from Russia and Brazil, which are countries that we're not really very active in right now.
Got it. Okay.
Yeah.
So I cut you off. I started a question with chip on your sholdder, and I haven't gotten.
So I think now the facts are kind of you can dispute them, but starting with
how big are you?
Well, so let's sort of look at some statistics in terms of covering the number one concern that we always had, which is or investors and people have always had these questions, and I think the most common criticism is who the hell would shop on Wish? So look, about 60% of our transactions are now coming from consumers that have 5 or more prior transactions in the past. Our consumers
on Wish.
On Wish, yeah, this is all on Wish. Our consumers are buying 16 items per year, and we're selling, and our consumers are buying about 2 million items per day, every day on Wish. So it's pretty significant scale. We're talking about 700 million, close to 1 billion items bought annually.
Okay, now the numbers that I like to talk about, like GMV, revenue. I think last year I reported in October, so before the real holiday push, you were on track for I think it was annualized rate of $2 billion GMV, which is very large for a 3-year-old company compared to the mammoth companies, still a ways to go. So where are you on GMV today?
Yeah, don't discuss GMV. It's definitely higher than that. Look, we're more than doubling every year, which is sort of still a testament to the market size.
So $4 billion run rate today?
Somewhere, but much larger than 2. Let's just put it that way.
Okay.
And we believe we have a lot of room for growth.
So you mentioned you don't hold inventory, which was seen at the start as sort of marketplaces in general, with the exception of Amazon, which does hold inventory.
They do both.
They do both, right? Marketplace model, though, and you said you didn't need to raise that much capital. So last year, you said something like that. Last year raised $500 million, right? A couple of weeks ago, I reported you raised another $500 million. One of the lead investors being Temasek, Singapore. Did you raise that much? I mean, I know you did, but can you confirm that because you haven't confirmed that anywhere? And then what do you need that money for? You just said that.
Yeah. That's a great question. So actually, the first $500 million we raised in December of 2014.
Okay.
And then
so bad reporters didn't break it.
Yeah. So there's basically 2 years in between those raises.
Okay.
Almost 2 years. Call it 22, 23 months. So we don't really talk about fundraising. We did raise another $500 million, and it's partially to address some of the other criticisms, right? So the second criticism is, okay, now you have the volume, you're shipping 2 million items per day, but you're probably spending all this money, and it's completely inefficient, and this is a house of cards, et cetera.
Yeah, I reported also that you were Facebook's largest advertiser.
There's probably no way that's the case, but you can talk to Facebook about that. We don't think we are near the largest advertiser.
You toned it down, but okay.
Okay. So I think that's maybe a slightly, well, I don't think that's a valid argument, and there I don't have an analogy for you, but I do have some stats, right? So we have 10 months of positive cash flow in a row. We have about $1 billion in the bank, and we posted a 4.2 million GAAP profit in October, which we were actually upset about because we're actually supposed to, our strategy is to break even, similar to other big companies.
So GAAP like net income that a public company,
like EBITDA, proper profit. But to address your question as to why we've raised the capital, and it's to actually address what I think are much more valid criticisms of the business, which is that the shipping times are extremely long. And it's scaled and worked so far because the prices are so inexpensive that consumers are discovering products. Number one, it's not a search-oriented intent paradigm like it is with the successful e-commerce 1.0 company. Like Amazon, eBay, all these companies, the experience starts with a search box. You type something in, you get some stuff. I'm buying a vacuum cleaner. Cool, I'm gonna review it. It's kind of like a chore. Maybe I retype my search query after I learned some stuff.
eBay's part discovery too, but
partially. But it's still like if you look at the experience, it starts with a search box. Try to find a search box on Wish. It's much more like a shopping mall. But what this means is the consumers don't necessarily need the products, the next day or within 3 days. They can wait a little bit, and the price is so good that they're actually, this is the only way that they can potentially afford these products. So we've gotten away for it for a while. But if you really sum up our priorities and the way that we're going to use this funding, is the top priority is now logistics. So we've launched a product called Wish Express about 15 weeks ago, which is basically an average of 6-day delivery. We launched it in the United States and Europe. It's now 7% of US GMV. So it's scaled up really, really quickly.
So 6-day delivery to people in this room probably sounds still ridiculously long, right? But you're saying it's a big change and improvement.
It's much better than 15.
It is better than 15.
Now look, Amazon's been at this for a while. I think they've done a phenomenal job. Can we get it to next day? I'm not sure. Where we're investing in now is in Europe, we can probably get the delivery times really, really short. We can probably reduce it to 2 to 3 days, at least for the markets that we really care about. In the United States, depending on how deep we'll dive and sort of optimize things. But I think we can get it down significantly as well.
So I think you mentioned a couple of criticisms. I see you come very prepared. And
I've been hearing these for 5 years. You have to understand. So I had a long time to prepare.
And I mean, another one, and maybe you did mention this in passing, is we've seen historically with fast-growing e-commerce startups, pump marketing. At some point, either the market, they can't raise anymore, they're not a solid enough business to go public, they let off the marketing, revenue goes down as well. If engagement's not there, that's a big problem. So, and I've heard from people I've talked to who know your business that earlier this year, you guys stepped off the gas a little bit on Facebook marketing.
All marketing.
All marketing.
Yeah, don't single out Facebook.
Facebook, well, I look at you guys and I think Facebook
Sure.
marketing is your marketing strategy.
You'd be surprised, but yeah. Sure.
Okay, so why did you do that? And then do you fear whether the business is what it will do when you if you have to step off of the marketing? Is there a safety net?
Yeah, so I think the best way to answer these questions is with facts. Look, this year, over the last 12 months, we've probably tripled revenue. We're basically running break even. We've taken our gross product margin and doubled it at the same time where we've actually tripled our own revenues.
Okay, so explain in the real world how this is possible. So what have you done? How do you get this?
So this is possible. Look, the way we think about our business is either consumers develop a habit around purchasing on our platform, and we become a really impactful e-commerce business, or we don't, and we're just one of these other e-commerce startups or businesses that goes IPO and then basically doesn't really change over a long period of time, and you can pick whatever name you'd like. So for us, what's been increasing a lot, and I'll give you another statistic. Our LTV for the last 6 months has been increasing 9% month over month, right?
Yep.
So our CAC is about static. We've kept the customer acquisition cost static as we've basically doubled the number of daily installs since July.
And what do you attribute that to?
Hard work.
Hard work, yeah, of course.
No, I mean, it's a combination of things, right? Like, one thing is, look, this year, it's true. Like, what most people don't understand about marketplace businesses is the reason why we spent so much, and you can argue whether it was inefficient or efficient. At the end of the day, I still have $1 billion in the bank when I go to sleep tonight, so I'm not feeling that bad about it. Is in order, like, marketplace businesses, look, we have 300,000 vendors, right? They don't care about you if you're not like a significant part of their business, right? So you really have to spin that flywheel really quickly so that you get their mind share.
So you have to drive volume.
buy-in.
You have to drive as much volume
You have to drive
as
volume so they
Amazon
care
or
about you.
eBay for them, or what?
You have to be comparable. For us, you have to be in the top 3. So for us, it was really critical that we're, at least for a vast majority of our top merchants on the platform, we're 20% of their aggregate volume. That was super important. That we have the merchants themselves have a significantly high margin, equal to our competitors, their profit margins, and that they're growing really quickly. And you can't do that, if you have a small platform. If you have a small platform and you're not growing or you're not a significant portion of these merchants' revenues and profits, they're basically gonna treat you as an afterthought. So it's really important to get into that. On the consumer side, what we've done is, look, we've improved our customer satisfaction rate from like high 50s to 87, which is comparable with Amazon, right?
And that's based on what, that data?
So that's CSAT is a metric where we have about 120,000 customer interactions per day, customer service interactions, and then there's a survey post the customer service interaction where we ask each consumer, was your customer service interaction positive or negative? It's just a binary question, right? And the rate went from something like 57 to 87%. So we did that. We launched Wish Express. We launched a variety of programs to actually help the consumer as well.
Back to the shutting off advertising, paid
Sure,
marketing at the beginning of this year, because you threw a lot of stats at me and then I forgot if I got an answer. So we're going to go back to it.
Okay.
So shut off Facebook marketing. Why and what happened to revenue and GMV as a result?
Yeah. So we saw a shift. The best companies in 2014, 2015, at least in terms of the hype metrics, it was all about growth. And that kind of fit our model because we really needed the merchant mindshare. If we don't have the merchant mindshare, we can't do Wish Express, which is basically the forecasting of sales for products of these merchants and then moving them to Germany, to Spain, to the UK,
into
the United States.
warehouses you're leasing.
Into warehouses that basically we're effectively running or our partners are running.
But the inventory risk is?
We don't have any inventory risk.
Okay.
So that, at the time, growth was everything, and that kind of fit what we wanted to do.
And what investors wanted to hear as well.
And what the investors wanted to hear as well. In 2016, that changed a bit, I think quite a bit for a lot of companies. we knew the A/B experiments that we ran. We knew what we had to do. And basically what happened is we ramped up revenue. So we increased our margins probably by about 80% from January to, let's say, October. And at the same time, we basically had very little growth from January to July. And then in July, we said, OK, now we have really, really good unit economics. We have much better retention. Now it's time to start increasing and focusing on growth again.
So you shut off marketing because you wanted to make sure that
no, we wanted to show that we have a viable business. And at the time, we already had a significant portion of GMV. We felt that the merchant loyalty, at least among the top and the most impactful merchants on the platform, was there. So we thought it would be a good experiment to run. It's scary for some investors, right? Because you're like, OK, well, I kind of know what's going on because I've been running these A/B experiments all along, and I know what's going to happen if I shut off marketing because I understand my cohorts. So for us, it was like, OK, well, let's prove our unit economics. We did. And now let's focus back on growth again.
And that the growth will be sort of the goal, the top goal for.
Yeah, I mean, like if you look at, I mean, it's already the focus. I mean, we're growing probably, if you take the last 3-4 months, on average probably 30% month over month. It's significant. Part of that is the holiday season, but.
Right. And up until now, so the merchants that sell on Wish are vast majority located in China. Is that correct?
Yeah, I mean Asia, more specifically in China. Yeah.
Okay. I'm curious about any strategy. Do you think about wanting or needing to diversify that?
Yeah, so we are diversifying already. We're diversifying into some branded products, but any offering that we have, the core consumer value proposition is centered around value. So for instance, we're selling refurbished Apple products or refurbished electronics. We're liquidating apparel, right? So you could argue that this is competing with the TJ Maxx and the Fry's Electronics of the world, and we're doing it on the global basis. So
you're
selling taking inventory.
You're selling refurbished iPads, for example. Is that a product?
Laptops, iPads. So that's an electronics category. We're doing the same in fashion, and we think we can have a big impact there as well. But it's still relatively early.
Do you ever want to compete more head-on with sort of a platform that is all about intent? So something like Amazon or other marketplaces that you're going because you're looking for something, you're looking for an outfit for the weekend, or you're looking for, I don't know, would you get into consumable products? Do you have enough of advantages do you feel like you have enough differentiation outside of the type of product that you could go head on with companies much bigger than you?
So I think we can become a very large company in the business that we're already executing in now. Having said that, we'll try anything once. So we are, look, I don't know about consumables. I think we will probably have some experiments around there. As long as we can provide, again, sort of value to the consumer and our consumer is satisfied with the experience, we will attempt to actually fulfill that consumer need. In terms of intent, look, so one stat that I give away often is, I don't have Amazon's metrics, but it's probably 90% of their sessions that have a transaction probably have a search query in them. For us, it's the opposite. Less than 10% of the sessions that have a transaction in it also have a search query.
So people are coming to scroll the feed of...
Just like you're going to a shopping mall.
Yeah. We're going to turn it over to questions from the audience in a second. One more. There have been rumors about who has offered to buy your company, what the price has been, what you would sell for. Have you had hard offers to buy the company? And we're friends here, so who called you and why did you say no?
Yeah. Because I'm not going to tell anyone, right? No. Like the only hard offer, like in terms of like actually on paper that we've ever had, was in 2012, ironically.
Before you even were.
I mean, we had I think we had a Wish, but I mean, it wasn't anything that you'd want to own or really value, other than the team itself. So no, I mean, I think if you want to build a really, really big business, you have to aim for that, right? And
I'm assuming you're not saying aiming for selling the company. You're talking about aiming for...
No, I'm talking about building self-sustainable, which arguably we are. But let's say let's build it out to 100 billion GMV instead of where we're at now.
You've also said in an interview with me previously, you've said you think you could be the second or third $1 trillion marketplace.
Yes, long after I'm dead. Wish will hit $1 trillion GMV.
Okay, so someone's talked you off that
No,
$1 trillion.
I mean, look, in the very long run, I think it's possible. Look, I think Alibaba's going to do $1 trillion, right? I mean, I think we're all pretty confident about that. So I think on the one hand, yes, trillion sounds like a ridiculous number. On the second hand, someone's going to do it, and it's going to be someone that's actually aiming to actually hit that, right? It's not going to be someone that sells for $10 billion or whatever the market cap is.
Do we have any questions from the audience? I know we do. We got one. Yeah, we'll start with you raising your hand. There's a microphone. Please tell us who you are and what company you work for.
Sure. So, is it on again or is it still off?
It's on.
Okay, great. So my name is Theo Fifelski. I work for Gain.io. My question for you, Peter, is the user experience that you needed to create in the mobile space, 3 or 4 years ago is evolving and changing. And one of the things that we've noticed with our cardholders is that about 10% of them go to try Apple Pay through Wish. So my question to you is the checkout process that you guys have to master to get the cheap goods in people's hands. How are you going to do that?
So how are we going to master the checkout?
Well, so one-click checkout, right? Making it as simple as possible when someone comes to the platform to find the product, get the product in the queue, to have it delivered in whatever days, 7, 10, 3.
So how are we planning on optimizing the checkout flow?
Correct.
Well, I mean, we're always optimizing the checkout flow. And one big question for us, like if you actually use Wish now, we do something that's probably quite contrarian in the e-commerce world, which depending on what experiment bucket you're in, we actually try to kick you out as soon as possible. We try to get you to check out and complete your transaction and basically get out.
Does that mean putting checkout on a product page versus an actual
No, so when
cart?
you add something to cart, I think the majority of users are still in the bucket where it actually takes them to a checkout page, which is not the way that Amazon works or other e-commerce businesses work. And I can get into a variety of reasons why we do that, but we don't try to upsell our consumers and get them to continue to add products into the checkout cart.
So once they make a decision, you want that transaction to happen, so you're not.
That's one way to look at it. Yeah.
Okay.
Yeah.
And so, okay, well, we're going to jump to other questions. I saw another hand in the room. Here, one right here. Sorry. We have a mic coming. Can we get a mic up here? Thank you.
I think you're the closest mic.
Oh.
Hi, my name is Jeremiah, and I write for Venture Break. And so on the hypothetical, back to the acquisition question, let's say Walmart called you yesterday and said that they wanted to do that deal, and the number was right, all that's fine. What I'm more interested in is what would be the most interesting part about that for you, as far as bridging old and new and biggest of big and all the commerce and just helping a beast that is that large kind of come up to speed, be it the bridge component or the data or whatever it happens to be.
Yeah.
You have a banker here trying to work
Sure.
a deal.
So I didn't get to talk extensively about the last two probably more valid criticisms of Wish, right? Which is, shit, the delivery times are really long, right? Which is something that we're working through via Wish Express, and something that a larger company probably has a lot more experience with. But I'm happy with where we're going. You know, to go from 0% 15 weeks ago to now 7% of U.S. sales, shipping in 7 days or less, it's a significant achievement. And I think long run, 2/3 of our GMV, 2/3 of our transactions will be delivered in on an average probably 6 days or less. So we're pretty happy with that. The last criticism is that, and the actual reason is, I can go into it, is we probably haven't hired as much talent outside of engineering, data, and product. So we just hired our CFO.
Is that because of your Is that partly
Yeah,
because of your
so
background?
I think it's two things, right? I think it's our background, right? So we're like geeky engineers, right? And that's fine initially, and that allows you to be nimble and scale really quickly. And then two, it's because of the other three criticisms, right? It's like people look at that, and a lot of typical candidates are probably scared away. Now the GMV is relatively high. We just hired our CFO. we hired the person who did customer support at Facebook for both users and advertisers to work on our customer service and brought that CSAT score from mid 50s to high 80s. We have business development people coming in and working on opportunities and distress inventory, whether it's in liquidation distress inventory in apparel and in electronics.
So you don't want to be bought by an old retailer?
No, we don't. I mean, those are the assets that come with it. But I think finally we're in a position where we're actually getting these senior hires outside of the scope of product engineering, more on the ops side, on the business development side, on the financial side. So for us, I think Walmart's made its bet. Take it for whatever it's worth. And I don't think they're going to make another big bet. Strictly speaking about Walmart.
You're talking about Jet.com.
Yeah, Jet.com. And look, Doug called me too. Doug is the CEO of Walmart. But I'm not interested in selling the business. I love what I'm doing.
So he
I don't know what I would do.
Called you before Jet and said, we'd much rather have a mobile company.
That's not what he said at all. No, he just said to say hi.
He said hi.
He said hi.
And you said, hi, Doug.
Hi, Doug. He's really nice, way nicer than me.
So he said, let's talk about acquiring you?
No, he said, let's get together. I'll visit you in San Francisco. Let's hang out.
And you said?
Let's hunt boar in Arkansas. Yeah.
And you said?
Do you know why why Walmart was founded in Bentonville? And kept there?
You're not going to do this. You're going to take control of the interview?
No. Look, so
okay.
it's Bentonville is right in the middle of 4 states, right? And I think Bill Walton really liked hunting. So he had 4 different hunting seasons, and that's why it was kept there.
What about Sam?
I don't know. I don't actually even know which was
okay.
which.
So did you meet with Doug, the CEO of Walmart?
No, I didn't. No, I think he's busy. Look, I think, again, they've made their bet. They have to win e-commerce. Look, to give you perspective, one thing that I didn't get to, U.S. retail sales is growing at about 1% a year, right? E-commerce is growing at 15% year over year. These are 2015 stats in the U.S. E-commerce on smartphones is growing at about 53% year over year. So I'd rather be in e-commerce on smartphones, because that's where the trends are going, than any of the other two. I certainly don't want to be in sort of physical retail.
Okay, that's a good place to stop.
Okay.
Thanks so much, Peter.
Thanks, Jason.